goal of this chapter is to understand a little bit more about overhead costing, specifically 3 ways to calculate overhead down to the product level and eventually down to the unit level. Plant-wide rate was that single plant-wide rate, bucks over basis, one rate, shove it down the company's throat. Everything that's made in the factory needs to use that one rate. We said it is GAAP acceptable, but it doesn't give us a whole lot of information, nor does it do anything to bring about to light any inefficiencies or waste. We learned that the departmental rate was a little bit more accurate because it allowed us to set up several rates throughout the company, depending on what that department was surrounded with, whether it was machines, they could use machine hours. If it was human labor, they could use direct labor hours. If it was robots, they could use robotic hours. If it was a company that deals specifically in some type of entity, like for example, Hertz might be able to use business miles or car miles on the different overhead that they incur. It is still volume-based. Okay, it is still volume-based, but it does allow us a little bit of delineation between the 2 or 3 or 4 or 5 departments. And then the last one we just started talking about last time was I would call the behemoth of this. It's the activity-based costing that's 20 to 30 years old. Very expensive to implement, but it has been literally corporate changing and the companies that have adapted it and stuck with it. It does help highlight inefficiency and waste. And so many times it is used for internal reasons to help, especially in cost-cutting times. It can help with also decisions to be made. And last time I talked a little bit about pricing decisions. If it's a cost plus basis, there has to be a way to find out a more accurate cost. And that's where activity-based costing shines. So these, again, this is a PowerPoint that your author put together. This is a single plant-wide rate up at the top. It's basically 2 layers of calculation. Pool the overhead. It could actually even be one account if you had an unsophisticated company called overhead. And then the company has to budget whatever it is that they best think that overhead is based on. Our book has used direct labor hours, machine hours, and direct labor costs. And based on that one rate, that's the one rate that goes out to all the products. And so they give us an example that I'm not going to go over because I would rather work through the examples. So let me go to the departmental rate. I don't know why this there. Okay, let's see. So multiple departmental rates. Here you see that there's not just one rate. There could be 2, 3, 4, 5, depending on how many major departments a product has to go through when it's created. So there's multiple departmental rates, and each one of those rates are pushed down to the product. So that's kind of a visual of what that looks like. And then they walk us through the cost. The author did a pretty good job. He took the total overhead cost and he split it up in the various departments. The general ledger system would need to be overhauled a little bit to allow for multiple overhead accounts. There's various rates. Each one of those rates is then pushed down to the product. A little bit more complicated. I liked this slide because I mentioned there would be advantages and disadvantages on the table or on the test. So the advantages is that information's readily available. This is on the single rate. It's the easiest out of the 3 to implement. It's one calculation and shoved down the company's throat. GAAP says you can use it for external reporting. The disadvantage is that one basis may not be reasonable. In fact, it may not have anything to do with the way the product's made. And that has to do with the second thing that they list also. And all products probably don't use overhead costs in the same proportion. That becomes very true when we see activity-based costing. Here's the multi-departmental rates. A little bit more accurate, but a little bit more complex, more refined than using one single rate. This is also a volume-based rate, and so that can distort product costs. We saw a little bit of that last time. And then activity-based costing, this last visual here. you'll notice that there's not just one calculation here for overhead, and there's not just two. There is one for each level of major activity that these kinetic engineers find to occur in the creation of a product. Some companies use the same basis for many of the activities. We're going to see an example of that today. Some larger companies, I've seen as many as 15 to 20 activity pools for some of these very sophisticated companies. So the 4 steps, which we kind of went through last time and we'll go again today, is the challenging one, the one that's the most expensive, is to identify the activities and the cost they cause. That usually comes from having a different pool of people come in and watch what happens. And kinetic engineers trace steps, they trace movements, they trace time that it takes to go from one assembly line to the next. So a lot of different studies that take place. They trace the overhead to cost pools, and so they overhaul the general ledger system. They calculate a rate per activity for each major activity, so it can be cumbersome. And then eventually each one of those activities is pushed down to the product line. And then the PowerPoint slide goes ahead into greater detail on all of those. There it is. So the advantages, much more, I wish I would have put the word much more accurate overhead cost allocation, because as I mentioned last time, what this attempts to do is take these indirect costs. By definition, all of these things are indirect costs, and treat them as if they were a direct cost. In other words, they look for what caused the cost to happen, and they'll use that as the driver, and they'll redesign the accounting system based on those activities that these cost theorists, or whoever comes in and does the motion studies, come up with. So there are some advantages. I would say the biggest advantage of this, and I'm not even sure they list it. I think the biggest advantage is that it highlights inefficiency and waste. The major disadvantage there, the cost. It is extremely cost burdensome when you have to start hiring accountants, engineers, kinetic engineers. You have to make space for them. I can tell you from being in the environment one time, the employees are very stressed out because they feel like their jobs, when someone puts you under a microscope, many times it gives you the impression that your jobs are on the line, which was not the case in the company that I visited. There could be some product cost distortion, but it's usually much more minimal, because if you identify that that's happening, you just create another cost layer to account for that. And again, in this blue area, it's not acceptable under GAAP yet. And so the reason that we're talking about it in managerial accounting is because there's many things that this can help us make decisions about. One of them being pricing, when we look at pricing decisions. That's it on the overhead. There's many more slides. I just want to kind of wanted to recap what we talked about last time. The rest of our time is going to be jumping in, getting our hands dirty, and of course, giving you guys the opportunity to ask questions along the way.
All right, let's get started. In our first exercise, we're going to be asked to compute overhead using that single plant-wide rate. And in requirement number 1, the author tells us that the rate should be based on 2,500 direct labor hours. This goes back to a bucks over basis calculation. So the total budgeted overhead is 30,000. The budgeted direct labor hours are 2,500. When we calculate out that rate, we'll use this one rate of $12 per direct labor hour, and that rate would be applied to everything that's made within the company. It looks like they make 2 products, product A and product B. So let's go ahead and push it down to the products. We have 2 products, A and B. And because this basis is based on direct labor hours, we need to find out how many labor hours each one takes. And here's where the author tells us. So we will take that rate above and we'll multiply it by 2 direct labor hours for product A and 2.5 direct labor hours for product B. We'll take that rate that we just got above, we'll multiply it out, and let me make these a little bit more descriptive. We'll call that the rate. We'll take the hours, and we'll get the factory overhead that would be applied. Fix my spelling mistake. And you can probably do that in your head, but just in case, I'll let the computer do it. And that should be a review for most of us. Now, if I go read the directions again, it's not just the factory overhead applied that they wanted. They also wanted the product cost. And we know that product cost is comprised of three things: direct material, direct labor, and factory overhead. So we would bring these costs down as we just computed them. And materials and labor are given by the author as $20 and $40 for product A, and $30 and $50 for product B. And when we add those up, we would be able to get the total product cost. Okay, so that's really a review of what we looked at last time. The second part of the problem has us using activity-based costing. Step one is to identify the activities that make the cost happen. The author has provided three major activities that went into $30,000 in overhead. So what we're going to do is we're going to list those three activities, and we're going to do a little bucks over basis calculation. So we're going to take three cost pools, the one for machine setup, parts handling, and quality inspections, and we will divide by the number of setups. This would be throughout the manufacturing company. They gave us those, so we'll calculate the rate per activity driver. So the rates per activity are shown here. And you may want to remind yourself that that is per setup and per part and per inspection. Once you have those rates, three rates in this case, you would push it down to the product level. There's two products being created, or two products in question in this example, and the author gave you the information you need right here. So now it's just a matter of multiplying the number of setups, for example, that product A and product B took, times the rate per hour of 500. With the parts, 10,000 times 50 cents a part, and 6,000 times 50 cents a part. And then finally for inspections, 40 inspections at $120 per inspections, and product B took 60 of those inspections. Push the costs out. I'll let you do the math, add them up, and then let's compute how much overhead per unit would be. Let's check our math and make sure that we appropriated $13,800 to product A and $16,200 to product B. We need to figure out how much each one of those products incurred in overhead. So the final step on this part of the problem would be dividing by the number of units. Once you do that, you came up with factory overhead of $13.80 per unit and $81 per unit for product B. The last thing we'll do to wrap up this problem is push it down and figure out what the total product cost is. Direct materials and direct labor did not change, but factory overhead did. And so here is the last step. The materials and labor were given. The overhead we just computed above in yellow. That gave us total product costs of $73.80 for product A and $161 for product B. That's our first attempt at activity-based costing. Let's try another. Here's another introductory exercise to activity-based costing. In this one, they gave us the rates. That means the author has completed the bucks over basis calculation for 3 different levels of activity. In addition, he's provided how many resources or what part of the resources job A and job B used. And so your job is using those activity rates and using the activity usage. Go ahead and give it a shot and see if you can push the cost down to job A and job B. Pause the video and we'll compare our answer. The rates are shown in this column. The drivers are shown in the next column over. And all we're doing is taking the resources utilized times the rate that was given. So job A used more requisitions than job B used. So it's only fair under activity-based costing that job A gets more of the cost. Quality inspections, one job took half as many inspections as the other. So as you'll see, job A got the mother's load of the inspection costs. And finally, the utilities were also more expensive on job A. Check out your math and compare your answer to mine. This is an example of how job order costing can not only be used for products, but can also be used for assigning cost to jobs. Let's try another. Okay, time to jump from those baby steps up into a tougher problem. In this example, the author has given us the cost pools, and he has also identified 4 different activities which he believes causes the cost to happen. In addition to the bucks, he also gives us the activity usage for the company overall. So step number 1 is going to be for you to divide the bucks by the basis and come out with a rate per driver. Once you get the rate per driver, you're ready to push the cost down to the product level. You'll see that he specifically asks us about 2 products. So using those rates that you compute in the first step, you're going to apply them to the 2 models and calculate how much model X incurred of the overhead and how much model Z incurred. I believe the author is going to have you push it down to the unit level as well, which means you will divide that by units. And then he's going to have us compute the total product cost. That means direct materials, direct labor, and factory overhead. And then he'll ask us a question about the gross profit. So this is a pretty encompassing problem. Pause the video, see if you can calculate those 4 different requirements, and we'll come back and compare answers. I know you can do it. Let's check out the activity-based costing rates that you came up with. Machining, setups, inspection, and purchasing were identified to be the 4 major activities. When we took the bucks per the cost pool and we divided by the basis, we should have come out with these 4 rates. Take a moment and check your work. Secondly, we should have applied those rates based on the utilization or the resources that these 2 products used up. So step 2 is where you're most likely to make a silly math mistake because there's so many numbers involved. So in step 2, we use the author's information to gather the amounts utilized. So here the information was given to us. We multiplied that by the rates that we obtained in step 1. At the very end of that step, once we had the total factory overhead per model or per product, we took it to a per unit basis, which means we divided by the number of units. Okay, so once again, review your work and carefully compare it to the solution you see on the screen. And if you find that you're getting stuck on any one of these steps, pay closer attention to what you're doing and don't hesitate to use our embedded tutor or myself to help you catch your mistakes. Step number 3 was to take the factory overhead unit per unit you computed in step 2 and use that to calculate the total product cost. Direct materials and labor were given. Here you see the overhead applied, and on the green line you'll see the total product cost that we came up with based on the activity-based costing results. Then finally, in the last step, the author wanted you to compute the gross profit per unit. You'll notice that the first product is showing a loss per unit, and the second product is showing a fairly decent profit per unit. As always, if you've had me for a previous class, if you're asked to calculate the gross profit, take it one more step further and calculate the gross profit margin, because that can also be very telling about the product's profitability. How'd you do? After comparing your answers, try it again. And if you still are having problems, that's when we want you in tutorial hours or in office hours or in one of the instructor hours. These last 2 problems should help drive the concepts home on why overhead costing is so important. On this problem, we'll be using a single plant-wide rate, and we'll compute the overhead applied, we'll compute the product cost, and we'll compute the gross profit. The exact same data will be used in our last problem, but rather than using the single plant-wide rate, which means one rate applied to everything company-wide, we'll take a look at how activity-based costing changes things up. So let's read the problem together, and then we'll attempt your answer. Using a single plant-wide rate, so stop right away. In my mind, I would be thinking bucks over basis. Whatever that basis is, probably direct labor hours, we're going to use that one rate and apply it to everything that we make. Okay, so that'll be our step 1, compute the single plant-wide rate based on 40,000 direct labor hours. That's a simple bucks over basis. Then they tell you how long. It looks like we're looking at salsa today, which makes me hungry. It will ask you or tell you how many direct labor hours the extra fine salsa costs versus the family style. And they'll ask you for the overhead cost per unit. We'll then compute the product cost, which means direct materials, direct labor, and overhead. And finally, we'll calculate the gross profit. So again, this problem will use a single plant-wide rate, and our last problem will have the same data using the activity-based costing rate. What do you think is going to happen? Let's go over the solution. Step 1, the bucks over basis should have resulted in a rate of $7 per direct labor hour. Using that rate, we should have multiplied that by direct labor hours per unit given to you by the author. The product of that is $14 for the extra fine salsa and $10.50 for the family style salsa. Once we had the factory overhead per unit computed, the author asked us to compute the product cost. As we know, the product cost is the combination of materials, labor, and overhead. and the overhead was carried down from step 2. That led us to a total product cost of $62 for the first type of salsa and $51.50 for the second type of salsa. The last thing the author asked us for was the gross profit per unit. We took the selling price provided by the author, compared it to the cost that we computed above in step number 3, and that gave us a gross profit amount in per unit. And as I mentioned previously, always take that to the next level by turning that into a gross profit margin. That'll help us assess many different things throughout the semester. Okay, how'd you do with the single plant-wide rate? I hope by now you feel really comfortable with that method. What you're going to see in our last problem is the activity-based costing method applied to the same data set that we just used. Let's go after it. Here we go with this final wrap-up problem. Same set of data, same set of facts, just using a different allocation method. When we calculate activity-based costing, it's necessary to have the costs by or pooled by activity, which the author gave us, as well as the designated basis also given to us. So if we look at the requirements, the author wants us to compute the activity rate for each activity. That'll be the bucks over basis for the 3 activities you see listed. Then he'll have us push it down to the product level. We'll figure out, based on the resources consumed, how much cost would be allocated to the extra fine salsa and how much cost would be allocated to the family style salsa. Just as we did on the last problem, we'll compute the product cost per unit for each. Finally, we'll take a look at the product cost as well as the gross profit, and we'll compare results. Pause the video and see if you can get this last problem 100% correct. Step 1 was to calculate the activity rate for each of the 3 activities: mixing, electricity, and inspection. The rates that we came up with was $4 per direct labor hour for mixing, $2.20 per machine hour for electricity, and $200 per inspection. Once we had those rates, we pushed them down to the 2 products, extra fine and family style, based on the information that the author gave us here. Once we allocated it out, we added those 2 items up. We got $180,000 allocated to the extra fine salsa and $100,000 allocated to the family style salsa. We then took that to the unit level by dividing by the number of units and came up with $15 and $12.50. The author also asked us to compute the product cost. The product cost for the extra fine came out at $63, and the cost for the family style came out at $53.50. Notice that the only difference between these 2 and the previous problem was the factory overhead allocation. In other words, the materials were given and the same for both. The labor was given and the same for both. But the factory overhead this time was based on activities that caused the cost to happen. Moving further along, we also found that the gross profit margin was that was the product cost, $63 and $53.50. When those product costs were used in the gross profit, we found a swing in the gross profit margins from $1 to 50 cents on the second jar. Take a moment and compare these gross profits and gross profit margins to the previous problem where we used a single plant-wide rate. What conclusions can you come to based on the results of both. We mentioned that a very big advantage of using activity-based costing was that it could be used to identify activities that needed process improvement. We also said that ABC can highlight inefficiencies and can reduce waste. You notice that in this case, the one product, the family style in particular, that we thought was generating a profit is actually resulting in a loss when the activities that are consumed in making the product are costed out using activity-based costing. It's important that you understand how product cost distortion can occur, and as with everything else, the challenge comes in is the benefits received from overhauling the system worth the cost of doing so? This is one of those chapters that nobody cares for because it's very tedious and involved. But I'm hoping that, especially on that last problem, you saw some of the benefits of implementing a more complex and diverse system. In class, we spent our time on the calculations. Make sure you read the last part of the chapter, which describes the 4 types of activities that cause overhead costs. One of the biggest challenges is actually to identify the activities which cause the cost to happen. The author will give you examples of activity levels, and you can practice classifying them. And then also, don't forget that activity-based costing can also be used for service providers. I have seen this actively in practice, and it made a world of difference on how the prices for medical services were charged. So make sure to read the last part of the chapter. Our lecture focused on calculations, but you are responsible for the content of the chapter. This is Professor Johnson signing out.